My name is Derek McPherson. I'm a Vice President and Equity Research Analyst at Red Cloud Securities, Inc. Today's presenter is Karora Resources, a Canadian-listed Western Australian gold producer who, in our view, have added significant shareholder value over the last 12 months, but has yet to see that reflected in the share price, presenting an opportunity for those on this call. Today, I have with me on the webinar Chairman and CEO of Karora, Paul Hewitt, who I've known for quite some time and always enjoy talking to him. Format of today's webinar will be as follows. Paul will give us an update on Karora and what investors have to look forward to over the next year. And then we'll take questions live from the audience. So if you have any questions, please type them in the chat and we'll get to as many as we can in the time allotted. So to start with, we'll handle the disclosures. For Karora Resources, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Karora Resources corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to buy or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our recent note on Karora for the applicable disclosures. So with that exciting part out of the way, I'll turn it over to Paul. And he'll give us the update on Karora Resources and what investors have to look forward to over the next 6 to 12 months.
Thanks, Derek. And thanks, everyone, for joining me here today at the Red Cloud webinar event. I truly hope before we start that each and every one of you, along with your families, are really healthy during this pandemic. It's been challenging for everyone. With that, I'll just jump into the presentation about Karora, our new name, as most of you may have picked up on, KRR, the ticker. I'm obviously really excited to give an update on the company, especially considering the wind we have behind our backs here at $1,800 gold. It's been a long time coming. $1,800 gold is certainly something for all of us gold producers to be quite excited about. So let me just walk through the deck with you. Our disclaimer that Derek talked about. This is obviously some of the coarse gold that we have already removed from our operations, our Beta Hunt underground mine. Our location of our assets currently in Western Australia, all our assets. Myself and Graham Sloan, myself as Chairman and CEO, formerly President and CEO of Klondex. Graham, who's been on the ground in charge of our operations in Western Australia, the former CEO of Perseverance. He was actually responsible for building the Fosterville mine that most of us are very familiar with today because of the success it's had at Kirkland Lake. Graham's also former CEO of Tanami and Herentia. Graham comes with an excellent track record, and this is why a lot of this works here at Karora. It works because I have a lot of experience in North America as an operator. Graham has a tremendous experience in Australia, and together it really leads the team to what we've already accomplished, actually, and going forward. So we are very excited about our future. Let me just talk about some of the highlights and milestones that we've actually accomplished. And I know it's already July here, but these are Q1 numbers. Our Q2 numbers, just to give you a sense here and an appetite of where they're going to be, expect those probably next week here. Our production numbers are finalized. We're trying to resolve our cash situation so we can share our cash position with people as well. So, but let's just recap Q1 here. Q1, we did right around 25,000 ounces. And actually, just before I lead into that, I should say that our guidance for the year was 90 to 95,000 ounces. Now, I just want to remind people, and this is worth mentioning, this is Karora Resources' first year in operation. This is the first year this team, this company has been in operation. And let's face it, we're faced with some of the most significant challenges the world has ever faced with COVID. Before COVID, we in Australia were faced with some devastating fires in Q4. So I'm very happy to say that our guidance in our first year, 90 to 95,000 ounces, remains on track. We are very confident we will deliver it. Again, expect Q2 numbers here in the probably next week sometime. And if not next week, shortly right thereafter. But I'm really hopeful for next week. What's been impressive along the way is we've been delivering right around that 8,000 ounces per month, 24 to 25,000 ounces per quarter. But along the way, you see a very, very positive trend. And that trend is a reduction on our all-in sustaining costs. From day one, we have made it our mission and our goal to not only produce this, get this company up and running as a gold producer, full stop as a gold producer, but to reduce our all-in sustaining costs. And the gold price is going the other way. There's nothing better than to be prepared for it. And we should always be focused on that. And actually, I'm going to flip between two slides here. I want to show people what we have been seeing since I've become CEO. So if you look at the middle of this slide here, we have been saying from the first moment I arrived, what we're going to focus on. We agreed that our target internally was to get to $1,000 US per ounce all-in sustaining costs, and we will get there. We are close. We're very close. We said we would focus on 4 things, and let me just recap those things because it's important for me and my team or any other team I'm part of that whatever we say we're going to do, we deliver on that. And here's a great example of us putting together and being in control of the company, saying, look, shareholders, this is what you can expect from us, and let us start doing it and not forget what we told you. So let's talk about it. Number 1, we said we would focus on royalties. And look, after in the last, call it 9 months, we've managed to reduce the royalties in this district. We have an 1,800 square kilometer package in Western Australia. We've managed to reduce the royalties in this district, historic royalties that have been there for a long time, by almost 10%. We reduced the Morgan Stanley one, and people are very familiar with it. Phase 1 and phase 2, all the way down, eliminated 7%. We've recently just announced a deal with Mavericks. And look, let me tell you, those of you who are in our industry or been around our industry, it's not easy to buy a royalty from a royalty company. That's their business. They don't enjoy selling them. So this was truly a big accomplishment for us. It was certainly mutually beneficial for us and our shareholders. Let me focus on those 4 things that we said we would do. And you can measure us yourself and see, wow, they are ticking these boxes. Vendors, we said we would approach our top 20 vendors. Phase 1 of that is complete. We're now working down the list and working below our top 20 vendors. We're seeing already a reduction in our all-in sustaining costs north of $40 an ounce just by renegotiating contracts. We made it a focus of ours and our purchasing group to go meet with our top 20 vendors. And we were so strongly positioned that we were able to negotiate better terms, better contract. That has seen an immediate saving for us. It took us some time. We're actually trickling that down now to all the rest of our vendors. Personnel. Well, I talked about Graham. Graham joined the team. He brought on 2 new GMs. They've brought on their own following. You've heard me say time and time again that our turnover rate in Western Australia has gone from 87% down to 16%. That has a huge impact on our all-in sustaining costs. But what we've been able to measure now is productivity rates. Our productivity rates have come up about 30%. 30%. So these things are certainly benefiting us and our shareholders. G&A. We talked about G&A. We see a dramatic reduction in G&A, and we're going to continue to strive on that reduction. So back to my point, we said our internal target was $1,000 an ounce. We're going to focus on 4 things. And when you start looking at them, you start seeing done. What's next? And our goal is to make sure we sustain that. Even though gold prices are going up, we should be very, very focused and diligent at always maintaining those costs for our shareholders. Let me go back to the previous slide here. So talk about balance sheet. Obviously, those of you who know when I first took over, I remember being on the first quarterly call, actually. I was disclosing a negative $8.7 million in working capital. It was challenging in the beginning. We've made some big strides with the acquisition of the mill, with the reduction of the royalties, with delivering, with actually performing, achieving our targets. Q1, we ended with $38.4 million. And I just want to remind people, we have said this, it's been public. That was net of post paying into $5.3 million in hedges. So Q2, our results are going to be favorable. They're going to be in line. People are going to be pleased. But I do want to explain one thing about those hedges. Our hedges now are going to be gone. We had hedges that we inherited as part of acquiring the mill, and they made sense at the time. And again, when we bought that mill, I think what was gold, $13.50 or something. It hadn't done its first rally. In fact, we bought the mill, the rally came about 6 weeks afterwards. So our timing was impeccable on that. So cash continues to grow. All-in sustaining costs continues to reduce. And what's happening with the company as a whole? Well, look at our shareholder base. We've been able to add some extremely strong, significant institutional shareholders. In fact, this slide shows about 15. I believe we're up towards 18 now. We have added some very strong institutional shareholders who believe in what we're doing, who agree that what we're doing is transforming this company, and we're setting the foundation to really continue to unlock value in the near future and going forward. So quite honestly, that slide certainly says a lot about what we've actually been able to do and some of the things we've actually delivered on. And then I just real quickly on the 2P reserve at Beta Hunt and why is that significant? It's significant because we've always wanted to restructure that debt. We have that debt at 10%. We finally removed the hedges that were required for that. They're gone, but they cost us something. We're looking at restructuring the debt, but we're being very, very disciplined here. We have at least 5 different groups at the table making us offers. The one thing we've made very clear to the bankers or people offering us this debt is that we're not interested in doing some hedging. Most of the groups that are offering us some debt are suggesting that they should be accompanied with some hedges. And we believe, and I certainly believe gold is going to 2,000. I really believe we're heading for a really good bull market, and this is just the beginning. So putting in more hedges, I think, would really harm us. I don't think that helps our shareholders at this point in our company's life. So as we're restructuring that debt and looking at the longer term mine plans, we're going to make sure that we take into account that something we're not going to do. And that's, again, putting on more hedges. So again, let me repeat about the guidance, 90 to 95,000 ounces. Let's talk about the exploration. 2020 is a big year for us. Look, it's 45 to 50,000 meters. This was the initial budget. This was the budget we prepared at $1,400 an ounce gold. Now, gold is at $1,800 an ounce. We've managed to reduce costs throughout our organization. That will likely lead to extra dollars in our drill bit. There's no doubt we understand that there's tremendous opportunity in this 1,800 square kilometer. We've been press releasing a lot of those results from the Higginsville drilling program. We're going to spend $9 to $10 million this year. By comparison, the predecessors before us were spending about $300,000 a year. Now, why is that an opportunity for us? It's an opportunity because this thing hasn't been drilled. This is great for us and our shareholders. We have it at a perfect time in history where we can start just drilling this thing and really unlocking the value of these brownfields targets. We've got about 32 brownfield targets. Just think of that. 32 brownfield targets between Beta Hunt and our Higginsville operations. We're sorting those out or prioritizing by grade, the size, closest to the mill, permitting. Those are really the 4 key things we're doing, but prioritizing those is really important. And we've been consistently saying, look, we're going to put 2 years of feed in front of our mill, and that's already there. What we're going to do now is start displacing different grades for ore, providing ourselves more optionality and increasing production. There's no doubt, and I want to really qualify this next statement here. Do we see ourselves growing from 100,000 ounces? That's our first year. Are we going to grow from 100,000 ounces? There's no doubt. Where do we get to? Look, let's assume we target 200,000 ounces a year, but hear me out here. It's not perfectly mapped out today. How do we get there? We're going to get there through most likely two ways. One of them is from our drill bit, and we're seeing results, direct results, month after month after month. Where we haven't seen a lot of results is our Beta Hunt mine. With the renegotiation and reduction of the Mavericks royalty, you will start to see some results from our Beta Hunt mine. And I just want to remind folks that we signed a definitive agreement, and that definitive agreement is binding. However, it's going to be finalized and fully executed in 10 days. And out of respect for that, I just want to say that Beta Hunt now is, in my opinion, the handcuffs are off of it now. Now is the time for us to really start reporting Beta Hunt. I'm not going to talk a lot about more of the upside of Beta Hunt. I will start talking about some of the future stuff and the drilling and everything afterwards. Let us first close this deal. We're close. We're almost done. We've been working so hard to get this deal done. Let us finish the deal and let us start drilling, and the results are going to speak for themselves. So Beta Hunt is going to start seeing some of the love that we've given to Higginsville over the last 9 months. Again, 1,800 square kilometers. And look, just to put it into perspective, so we've managed to reduce the royalty in this district, and I know I keep coming back to it, but it's so important. And if you see how expensive it was to us, actually that Mavericks royalty reduces us by $45 an ounce, $45 an ounce US. When you start looking at what we did reduce the royalty forever, in perpetuity now, forever, about 10% in this district, and we look at what we were saddled with, Beta Hunt on its own for 3 years had a 10% royalty between the large royalty holder and the state. That 10% royalty, we gave up right under close to $30 million Canadian of our shareholder money. We had to pay $30 million in that about 3-year period. So look, a reduction of 10% royalty in a district that hasn't had a lot of drilling in over a decade is a tremendous opportunity, going forward for us and our shareholders. So we're extremely, our geology team are over the moon excited about where we're going to drill next. And again, we've got to be disciplined, focused, like we have been from the beginning, remain in control and drill in the right area. Make sure that our drilling gets that into the mill. So these are really important things that we have to get done. One of the things I've been talking about that we are facing here at Karora is an issue that I haven't had to face with much in my career ever. I've been mining 33 years in Canada and the US for Kinross, Newmont, Grey Basin Gold, Klondex, several companies throughout my career. 9 out of 10 times, I'm always the person getting a phone call in the middle of the night or middle of the day saying, Paul, we got some bad news. There is no ore for the mill. We're out of ore. We've got to accelerate PMs. We've got to move our schedule. We've got to change ball liner. We have to do something because we just don't have the feed. We have the opposite situation here at Karora, and it's a technical issue that we will overcome. This is a blessing for us. We have too much ore. We're producing ore from FAIRPLAY North, BALOO, and Beta Hunt. Now, some of this, let me remind you, was intentional. And we said we wanted to remain proactive in case this pandemic went sideways or there was stuff out of our control. We intentionally put a 100,000 ton stockpile in front of our plant, which remains there, by the way, in case there's a second wave or something happens out of our control. We fully believe that we will be given permission to at least run the mill. Similar situation like the fires that we had that devastated Australia. When those fires hit fourth quarter, we were down almost 17 days, no access. But because we were proactive and had a stockpile in front of that plant, we delivered a very, very sound quarter and added cash to the balance sheet again. We've taken that same proactive measures and steps here by putting together a stockpile in front of the mill now. But we are in a situation where the mill is, we're about 4,000 tons a day. We're producing, call it 4,500 tons a day, or some days even 5,000. So what are we doing to overcome it? Again, it's a technical issue. There is no doubt in my mind, none whatsoever. We will overcome all technical issues. We've already disclosed that we're looking at ore sorters. I'm excited to say that they're actually going to be returning here now. They're coming back in the month of July, which is exciting for us because they came on site, they did some initial work, and then they had to leave. We've also engaged an engineering group looking at mill optimization. So again, this issue of having too much ore is a blessing for us. It means that when we resolve it, we're then going to be able to mine at the same rate the mill can do, and we're going to increase production. That's going to be the consequence. So it's a great consequence. Let me talk a bit about Spargos, that high-grade open pit. Now, today, Spargos it's a small resource. It's small in size. We certainly didn't overpay for it. We did sign a definitive agreement, binding as well, and that's expected to close here in the next month. But we have been following up the resource model, the drilling, and just to give you some sense of some of the drilling, we have a drill intercept within that high-grade core that is 14 meters of 46 gram. You're talking almost 1.5 ounce per ton across 14 meters in an open pit in Spargos. So look, as we continue to complete our due diligence, the results have been good. They've been favorable. It appears as though everything is falling in line with our expectations. So if once we close this in July or the next month, it is possible that we could get this thing permitted, up running, and start getting a workforce and looking at potentially even as soon as the end of Q1 of 2021. Look, that's fast tracking an operation. That means we're buying an asset and we're paying very good value for this 140,000 ounces that exists today. It is open, and it is open on all directions. This thing has the potential to double, triple in size for sure. In fact, we have an escalator in the price tag. I believe it's $1 million or 1.5. Call it $1 million extra if the resource doubles in size from where it is to double in size. So what that does for us, it gives us optionality. Giving us optionality and creating flexibility in any mining company is always it will always be rewarded down the road. Anytime you have any issues with any operation and you have optionality or flexibility, you're going to be able to overcome things, and we will be able to deliver. We will not disappoint the market. When we tell you we're going to deliver a certain amount of production, because we have more flexibility and optionality, and we're being very proactive, we'll do it. And the results in the last 9 to 10 months speak for themselves. If you look at the milestones and the things we said we'd do, as a group, as a team, we've done them. And I'm very proud of that. Let me just go to the next slide here and talk a bit about some of the drilling results. So this is all at, I'm trying to change the slide. So this is a map here of Higginsville Central. And just to give you a sense here where we're mining here, actually, I think there's a feature here where I can circle it. Yeah, right around here, I'm trying to circle BALOO so you can all see it. I'll clear it, turn the pen off. So BALOO is 18 kilometers away from the mill here. If you go down that same road, you see Mouse Hollow and Hidden Secret. And we've been disclosing that those two are now forming into one here, which is quite exciting for us. We're going to continue mining BALOO. It's extended time and time again. It's always been constrained by drilling. Every time we drill a new set of drill holes, we add to it. At this point, BALOO looks like it's likely going to become even an underground target for us. If you look, I'm going to try to use that pen feature again here. In this box here, this whole Higginsville Central, and to the south here, Aquarius, here's another great target that we've been talking about. That target has an average grade of about 19 gram. And just to remind you, just north of it is the Trident deposit. The Higginsville mill, my apologies. The Higginsville mill was built for the Trident Underground. Trident Underground produced 1 million ounces of gold, just 5 kilometers north of that mill. Directly south is Aquarius along the same strike that has extremely very, very high grade. And then in the middle of the slide where you see a Challenger, it looks like a Italy boot there. That's some of the paleo channels. Those paleo channels are very exciting for us in many ways, actually, because those paleo channels are more like a mineralized sand. So what we could potentially do, and there's test work being done now to confirm this, but what we could potentially do, our bottlenecks are at the front end of the mill. We have the ability to potentially pump this material, and it's running all around very high grade, open pit 2 gram. There's even some underground targets in this Challenger district. We could pump this to the mill, not truck it, and that frees up the front end of the mill altogether. So that would be something that's very exciting. I was recently asked a question, Paul, do you think within this 1,800 square kilometer district that there could host a company maker? And I just said, look, there's no doubt in my mind. Everything we're seeing, all the targets we're looking at, there's so much potential in this district and so much upside. It just requires a very disciplined approach that we're already doing, a very strong focus. And could this district yield another 1 million ounce plus producer? There's no doubt. And again, I haven't talked about Beta Hunt, and I'm repeating myself here, but it is worth repeating. You will hear more information from us, from drill results, and that we're going to start drilling at Beta Hunt. We're going to start drilling pretty hard. And the deal will be closed and finalized in the next 2 weeks. And in my opinion, look, that's history making. What we've managed to do as a company here by setting ourselves up and making sure we're very focused at getting our costs in line where we want them, where we believe is an acceptable number, and then moving forward, we have the foundation set here now. Now it's about us continuing and delivering. Let me see here. BALOO open pit here, I've talked about it. It looks as this is a 2 gram open pit, very high grade. Every time we drill in it again, it's extended itself. This one here, FAIRPLAY North, is the second open pit that we are mining from. FAIRPLAY North, as a reminder, is 1 kilometer from the plant. It's been there forever. The only reason it was never mined was because of the onerous royalty that it had to endure. It had well over a 7% royalty. Nobody drilled it 1 kilometer from the plant here. We're talking on our doorstep here. This also is showing evidence that it could turn into an underground. I think that's good for what I want to say of the drilling. The last exploration area I really want to talk about is something that's directly north of the Trident. So you can see in this slide the Higginsville Mill, the red dot. Directly north, we have a new structure that we've uncovered through gravity survey that's about 5 kilometers in strike. 5 kilometers in strike. So look, I think back in my career, most of the mines I've run, I've been responsible for 1.5, 2 kilometers, maybe 3 miles. This is 5 kilometers in strike. It's untested. It has tremendous upside, and you'll continue to see that as we continue to unlock some of the upside in the future here. Spargos, I've already talked about it. I think what I'll do is I'm going to come back to the original slide here and just close out in a summary here and then open it up for questions. I can't tell how long I've been going, Derek, but let me just go to I just want to go back to one of my opening highlight slides here. Sorry, people. Thanks for bearing with me. So look, just in closing, I really want to talk about what's coming up here. So what do we have to finish? We've got to finish and complete the Mavericks deal. We signed a definitive agreement last week. We've got maybe 2 weeks, and that's completely behind us and looking in our rearview mirror. We have to finish Spargos. That has to be done. Complete that due diligence, make the recommendation to the board, and proceed with that. We have eliminated the final hedges. Sorry, lost my train of thought. I apologize. We've eliminated the final hedges in the company now. We're completely wide open to the market prices, which we're extremely excited about. We continue to deliver as promised, despite all the challenges we have. Our drill results have been very, very strong at Higginsville. Again, repeating myself, expect to see some results here from Beta Hunt here in the very near future. Again, I couldn't be more thrilled about unlocking this thing at Beta Hunt, because I have personally been frustrated about not talking about Beta Hunt, which is one of our core assets. Look, I think that really wraps up what I wanted to really talk about, Derek. I think I'd like to open it up now for some questions, if that's okay.
That's great, because we got lots, which is a good thing. Had a number of questions. Maybe we were talking a lot about exploration, so let's maybe stick on that theme. Sorry. You talked a little about Beta Hunt. There was a specific question on a claim I'm trying to find here. Okay. Are you going to explore the northwest parcel of Higginsville on Lake Lefroy? It's west of St. Ives and south of Beta Hunt. Being surrounded by mines, it may hold significant potential.
Look, that's one exact parcel. I will say this. If it's located within our 1,800 square kilometer, the answer is yes. We have hired additional group to start going through all the raw data. And look, Derek, we need to clarify something here. Just because there hasn't been a lot of drilling going on here, there's been companies that have owned this district for some time. We're compiling data from 4 companies, 20 and 30-year-old data that we're putting together, putting it into our own internal models, scanning, digitizing all this. So if that parcel, and I'm not sure if it is, if it resides within our 1,800 square kilometer, the answer is 100% yes.
And we are getting a lot of questions about, obviously, a Beta Hunt and the exploration there.
Let me just comment on it. So, look, again, I want to finish the deal, right? I've been silent on Beta Hunt for a reason for a long time, and my team have worked so hard. You heard me say this. Try to buy a royalty from a royalty company. It just doesn't happen. But let's recap something that did happen. In 2019, we as a company, we spent about $7 million, Derek, at Beta Hunt. The results of that were almost 1 million ounces in additional resource in the gold. You just think about that. That's the first time Beta Hunt's ever had any drilling. We keep talking about Higginsville forever here, but you think about our initiative and our effort and our focus. We needed to understand, well, how big can this thing be? We spent $7 million. We added 1 million ounces at Beta Hunt. We've opened up the door now that the negotiation of the royalty is behind us. And again, 10 days, I'm sorry. It's almost complete. Look, we've done all the hard work. It's mutually beneficial for both parties. But let us drill. We haven't drilled. Let us drill. And we have a tremendous amount of targets. This thing, and we have infrastructure. There's been infrastructure put in here for over 20 years. There's over 400 kilometers of tunnels here over top of us that was hosting the nickel. This proves to have so much opportunity for us to be drilling. We're not drilling everything from surface. We're underground drilling. It costs us a third of the price here. So for us to put together a strong drill program, the program's already put together. Now it's about start the drilling. Get the drills going. Let's start drilling. Let's start announcing results. Last year we did $7 million. We announced 1 million ounces. And well, let's see what happens as we continue to unlock this beast.
All right. And maybe sticking to Beta Hunt, the question a little bit about the camp. Obviously, Beta Hunt is within St. Ives, Gold St. Ives project. Is there anything like Beta Hunt within Goldfields that Goldfields has already mined, or is this a brand new animal?
There's 2 actually. Let me. I had them wrote down, and I'm sorry. There are actually. The answer is yes, and they. I believe it was called, there was two other, south of us, there was two mines. They were on the St. Ives property. They're directly south of us on strike. And I'm sorry I don't have them written. I had them yesterday. I apologize. Oliver would know them at the top of his head. I believe one's called Reward and the other one was Focus possibly. But my point is this. Both of those deposits that are in line, if I drew on strike where we are with the Alpha Island Fault directly here, and I know it's a pen, I'm sorry for you guys, but there was mined 3.2 million ounces and the other one yielded 3.4 million ounces. So we're surrounded by areas that have yielded that. There's no drilling between us and them. There's no drilling between us and them. So the upside for us is just exponential here.
Yeah. On the royalty buyback, a couple of questions on that. Obviously, that's as you noted, buying a royalty from a royalty company is actually very, very difficult. People were talking. There was a question here on about why shares instead of cash for Mavericks. I know on the transaction.
Yeah, look, that was part of the negotiation. We did offer cash, and again, I know I said this earlier, but let's think about what we have done as a company. We've reduced the royalty between Morgan Stanley and Mavericks 10%. We have paid for that. What have we paid? $27 million, of which we provided $14 million in cash, $13 million in paper. It was the only way we could get the deal done. They wanted our paper. They believe in what we're doing. They believe in the upside, and they wanted to show their shareholders that they believed in it and they were aligned with us. So the paper was part of the negotiation, actually.
Okay.
But look, again, 10% royalty. I've never done it in my career, and I've had royalties my whole life. I look at what we've already paid, and we've already paid $30 million with 10% just on one of them. We paid 20, and that's 3 years. 3 years. Are we going to be around for more than 3 years? By God, we better be. We darn well better be. And I'm convinced we'll be here a lot longer than that. 3 years, we paid $30 million. We paid $27 million to reduce that same amount. Again, $14 million in cash, $13 million in paper. This is a setup like no other. We have put the foundation in front of ourselves for our shareholders, and we fought for our shareholders. We fought hard. We only did it because we were fighting for them. That was my message to both Morgan Stanley and Maverick. We're doing this. We're standing firm for our shareholders.
And it has created a lot of fundamental value, and will, especially as you get back to drilling. I think that's the point. The royalty buybacks themselves don't look that exciting, but when you get the drills turning and the success you've had at Higginsville and the success I expected at Beta Hunt, that's where the value is created.
Derek, I was just going to say that. Just look at what we did at Higginsville. Yeah. Look at what we did. Look at the targets we've identified from renegotiating that royalty, a royalty that had plagued the district. That, FAIRPLAY North was sitting a kilometer from the mill. Nobody would touch it with a 7% royalty. They're like, we're not touching it. So anyhow, sorry, I'm off on a tangent, but I just see so much value, and it's hard not to get passionate and excited about this as I look forward to the future for us.
Yeah, I always like seeing passionate executives about their assets. The question on Beta Hunt, and this is something that you've dealt with previously in your career outside of Beta Hunt, but a couple of questions on the coarse gold, and if you think that you're going to be able to bring that into the reserve. Obviously, it's not reflected in the current reserve for Beta Hunt. Do you think you'll be able to bring it into the reserve in the next with the next update?
So here's what I believe I'm going to do, and actually, I believe it through experience. I've done this not only. I done it at Hoyle Pond in Timmins with Kinross. I did it at Midas with Newmont. I did it at Hollister. I did it at Fire Creek. I don't believe that we'll be able to add it to the 2P reserve because we have to have guidelines and capping with 60-gram cappings, and QPs will challenge unlocking that capping. So we will always have to cap it. However, what I do believe is what I've actually done in my life, and I've done it at all those other operations, through reconciliation. What we managed to do is by understanding this geologic formation, and it really is tight to this 80-meter tube or geologic formation, by mining that, we will learn, we'll reconcile it, and we will be able to develop a factor. That factor will be included in our mine plan and in our guidance. And Derek, if you remember this, at Fire Creek, we did this. We had a specific area in the mine where we couldn't put it in our 2P reserve, but in our mine plan, we added another 80% of ounces based on knowledge that we understood and gaining of understanding of that coarse gold. And we will be able to create that factor. It will not happen in 6 months. It'll take us a year or two. We're gonna have to mine these areas, and then we're gonna say, look, every time we mine an area within 40 meters of the sediment between the nickel and the gold, we see an X amount of extra ounces, and that's what we'll get to. We'll be able to use that to predict in our mine plan and into our guidance.
Yeah, it's experience. That's what it's going to take, mining it and building that model that way.
And look, sorry, Derek, I want to come back on one thing here. That coarse gold is important. We know it's important. We've taken a different approach here. We've always said we've got to get costs down. We've got to make sure that this mine operates. We've got to be able to demonstrate that we can be economic at the average grade, and that's what we've been doing. But how are we mining it? We're mining it differently. Instead of trying to drive a stope and a raise and trying to cherry pick this thing, which, by the way, look, I did that for 10 years of my life. Before I went to college, I was a raise miner. So I know what that's like, going up there with a slusher or driving a raise. It's very challenging. We're taking now what we're doing. Graham and I have come up with a great plan where we're putting in our infrastructure on the veins, on the shears, and we're taking the entire thing out. That means we will never leave coarse gold behind. Look, when Father's Day was discovered, it wasn't but 9 months later that in the wall, 4 feet in the wall, there was an extra 3,500 ounces of coarse gold. It's very difficult to tell that. There was no drill hole, there was nothing. It was just inside the wall. We're now taking an approach where we're taking the entire stope width, and we won't be leaving any coarse gold behind. When there's coarse gold there, it will report to the mill. It will come out. It won't be left behind there and someone come back and go, oh my God, it's been there for a year and a half. And that's a big advantage. It reduces our operating costs. It prevents us from ever having any losses of the coarse gold. So it's a change to what's been done in the past.
Right. Just if you mine it all, you'll get it all.
If you mine it all, you'll get it all. It's that simple.
Okay, and then we've talked a lot about exploration, which I think is a really exciting part of the story. But one of the questions from the line are what are the exploration targets that you're sort of you or your geologists, your team are most excited about as you're allocating that $10 million budget you've got this year?
Yeah, so look, I will say this: it's not one, it's more than one. When I think of it, right at the top of my head, there's 5 that come up, and I go, look, for sure, Beta Hunt. We haven't done any exploration drilling. It's time. We've removed the handcuffs. It's time. Beta Hunt, very exciting for us. But then you start diving into the detail of Higginsville and some of the success we've had. So Aquarius is we're starting to poke holes in there. It's at 19 gram. This is 19 gram. It's just south of our mill. We're talking 5 kilometers from our mill here. It's wide open. That is a very exciting high-grade area. The paleo channels that I talked about, if you can't get excited about that, this is mineralized sand. We're talking about pumping this material. I don't even have to truck it. I don't have to drill and blast it, nothing. The cost per ton is going to be so much cheaper, and getting that into the mill, it resolves one of our technical issues. We have a technical issue that we have too much supply for the mill. If you're able to bypass the front end of the mill using some of these paleo channels, that's a game changer, and that could really change the way we do business. And look, BALOO, an underground at BALOO, the Hidden Secret, Mouse Hollow combination of a pit, and it's still wide open. There are a series of some very exciting targets here, and you've seen some of the reports at Higginsville. We've not seen any at Beta Hunt yet.
All right. I think, and then along those same veins, obviously you guys have the benefit of lots of ore and lots of exploration targets, which suggests that your mill is undersized. You mentioned a little bit about the engineering program. When can we expect sort of an update on what that first expansion looks like?
Yeah, look, I'm not gonna corner us into that. I'll say that the engineering work has started, and again, the ore sorters are coming back on site this month. Based on my own experience, it's going to take at least a couple months for an engineering firm to troubleshoot. We got to be boots on the ground troubleshooting it with them. So, look, could we have something? What are we, July? Sometime this year. We're going to look at different alternatives. We're going to look at, okay, if we're 4,000 tons a day, what does it take to get to 4,500 to 5,000? It's going to be different, right? So we're going to look at this from a disciplined approach where we're making sure that all the expansions are done from internal cash flow. Those are some of our own internal expectations are, look, whatever we do, we want to make sure that we fund this internally. So those are some of the objectives we've put on ourselves internally.